Ever found yourself puzzled by the challenge of choosing the right multi-bagger stocks? Well, you're not alone. The world of stock investment is riddled with complexities and risks that can easily overwhelm anyone, especially those new to the game. It's like navigating a labyrinth with its twists and turns, symbolizing the volatile nature of the stock market. Now, let's talk about multi-bagger stocks. These are the hidden gems that have the potential to give returns many times their cost. Imagine buying a stock at 10 rupees and seeing it soar to 100 or even 1,000. That's the allure of multi-bagger stocks and why investors are always on the hunt for the next big thing. But finding these diamonds in the rough isn't a walk in the park. It requires a keen understanding of the market, a knack for analysis, and a good dose of patience. Indeed, it's no easy feat, but with the right knowledge and tools, you can master the art of picking out potential multi-baggers. Before we dive into the process, we need to brush up on some basics. So, when we talk about multi-bagger stocks, there are a few key terms we need to understand. The first one is PE ratio, or price to earnings ratio. This is the ratio of a company's share price to its earnings per share. A lower PE ratio could mean that the stock is undervalued, but it's not that simple, as we'll see later. Next, we have EPS, or earnings per share. This is a portion of a company's profit divided by the number of outstanding shares. It's a good way to compare profitability between companies and industries. Then there's market cap, short for market capitalization. This is the total dollar market value of a company's outstanding shares of stock. It's calculated by multiplying a company's shares outstanding by the current market price of one share. With these basics in mind, we're ready to navigate the sea of potential multi-baggers. Now let's delve into the process of choosing multi-bagger stocks. Choosing multi-bagger stocks isn't as simple as throwing a dart at a wall of options. It requires careful, thorough research. This is the first and most crucial step. You need to gather as much information as you can about the company you're considering. Look into its history, its performance, its leadership, and its future plans. The more you know, the better your decision will be. Next, you need to understand the company's fundamentals. These are the basic, essential aspects of a company that can tell you if it's a good investment or not. The fundamentals include the company's earnings, its debts, and its assets. Look for companies with strong fundamentals, as these are often the ones that turn into multi-baggers. Once you've done your research and analyzed the fundamentals, it's time to study the market trends. The stock market is an ever-changing landscape, and to navigate it successfully, you need to understand how it's changing. Look at the current trends in the industry the company is in, as well as the broader market trends. This can give you a good idea of whether the company's stock is likely to rise in the future. Finally, once you've chosen your potential multi-bagger stocks, you need to monitor them regularly. The stock market is not a set-it-and-forget-it kind of deal. You need to keep an eye on your investments, watching how they perform and adjusting your strategy as needed. This doesn't mean you need to check your stocks every minute of every day, but regular monitoring is essential. Choosing multi-bagger stocks is a process. It requires time, effort, and a good deal of knowledge. But with the right approach, it can be a rewarding endeavor. Remember, patience and vigilance are key in this process. The world of multi-bagger stocks is not for the faint of heart, but for those who are willing to put in the work. The rewards can be substantial. A great tool that can simplify this process is a stock screener. So, what is a stock screener exactly? Think of it as a search engine for stocks. It's an online tool that allows you to filter stocks based on specific parameters. For example, you could filter stocks based on their market capitalization, earnings per share, or price to earnings ratio. This way, you can narrow down the vast universe of stocks to a smaller, more manageable list of potential multi-baggers. But how does a stock screener help in choosing multi-bagger stocks? Well, by setting the right criteria. For instance, you might look for companies with a strong track record of earnings growth, low debt levels, and reasonable valuations. A stock screener can quickly filter out the companies that meet these criteria, saving you a lot of time and effort. However, using a stock screener effectively is not just about setting the right criteria. It's also about interpreting the results correctly. Remember, a screener is just a tool. It can give you a list of potential multi-baggers, but it can't tell you which of these stocks will actually turn out to be multi-baggers. That's where your own research comes in. You need to dig deeper into the fundamentals of the companies that your screener has highlighted. Look at their business models, competitive advantage, management quality, and future growth prospects. A screener is indeed a powerful tool, but it should be used wisely and in conjunction with your own research. So, what are the key points to remember when choosing multi-bagger stocks? Firstly, understanding the fundamentals is crucial. Knowing the basics of what drives a company's growth and profitability is like having a roadmap to success. It helps you identify the potential multi-baggers before they hit the big time. Secondly, research is your best friend. Delve into the company's financials, its competitive landscape, and industry trends. It's a bit like detective work, piecing together clues to form a comprehensive picture of the company's prospects. Next, remember the power of a good screener. This tool can help filter the wheat from the chaff, letting you focus on those companies that meet your specific criteria. It's like having a personal assistant who sifts through the masses to find those hidden gems. But the screener is just a tool, not a magic wand. It doesn't make decisions for you, but it can help you make more informed ones. Lastly, patience is key. Rome wasn't built in a day, and neither are multi-bagger stocks. It takes time for companies to grow and for their value to be fully recognized by the market. In essence, choosing multi-bagger stocks is a blend of knowledge, research, effective tool use, and patience. Choosing multi-bagger stocks may seem daunting, but with the right knowledge and tools, you can make informed decisions and potentially reap huge rewards.